Hi, welcome to CoinDesk Live. I'm Pete Rizzo, editor for CoinDesk. Today, Bitcoin is back at 2019 highs, so we're bringing you interviews with crypto markets experts to break down the hows and whys. To my left, Mr. Paul Chou, CEO at U.S. regulated Bitcoin derivatives exchange, clearinghouse, and asset manager, LedgerX. Welcome to the show.
Thank you for having me.
So Paul, obviously, well, maybe not obviously, the people watching, a big announcement today coming out. You're going to be opening your platform to retail investors. What does that mean?
So that means that basically for the first time in the United States, anybody with no account minimums can open an account that can get access to crypto, spot, options, futures, all kinds of derivatives for the first time in a regulated way. You could do this sort of thing back in the day overseas, but never really regulated by the US. So I think the US government giving this kind of license is a milestone for the system.
So average Joe, $50 can now come to you, say, I want to go long on Bitcoin. That's a trade I can make today.
That's exactly right. So they can put $50 million.
$50 million is probably the desired customer there.
Yeah, I mean, I would love for them to put more than 50. But they can both do, and this is key, I think, both dollars and crypto deposited.
Oh, really?
So even if you don't have any dollars, that you want to send to us. If you have some crypto from early mining days, you can send it to us. Start trading pretty quickly right after.
So I can use my Bitcoin to go long on Bitcoin?
Yep,
How does that work?
Yeah, well, you send it to us, and then we have all these derivatives contracts that will give you leverage. So that you can send Bitcoin to us and buy more options on Bitcoin so that if it goes up quite a bit, then you'll multiply your investment quite a bit.
And so what does that look like? Obviously, people are familiar with things like maybe BitMEX, 100x leverage. You're probably not going that route, I imagine. What are the options?
Yeah, so the options are leveraged naturally simply because they're options. But BitMEX, there are many other exchanges out there that give quite a bit of leverage. That's fine until it's not, where basically people get socialized the losses. And when we've seen a lot of these instances here, we guarantee all the trades. So that basically, once you have what you have, you will never have to take a haircut if something bad happens. So it's much safer in our view for that type of investor.
What does your customer base look like now? How does that change after this announcement?
Our customer base right now are basically big institutional funds that manage anywhere from 10 to several hundred millions of dollars, and they're very sophisticated. So they've been trading options for many years. They know derivatives quite well. There are a lot of crypto enthusiasts that are involved, and they're making markets again with each other. And so what we're hoping is to have a healthy interaction with this new license that we're about to get with retail customers that can basically work with institutions that can give them good liquidity.
So where do you guys make your money here? Is it on the fees for the buyers, or when they're entering?
As many ways as possible. So fees, buyers,
so
and
LedgerX coin is coming out then?
No, we're not doing anything like that. Our job is to keep it simple.
That is the definition of as many ways possible.
Yeah, well, many ways as possible that would not get us in trouble down the line. Our regulators are very important to us, and so we're keeping the model very clean, simple, just exchange traded fees, and then some other fees as well, and then we just scale in volume, basically.
So we're talking backstage a little bit. You've obviously been in the crypto market for a long time, back when it was just
Too long,
the
maybe,
Bitcoin market. And you were saying that you were around when Bitcoin actually hit parity with the dollar.
Yeah.
So what was that like, and what's your reaction, I guess, seeing the price today comparatively?
Well, it's really remarkable when you look at the price history of Bitcoin in general, right? It is an entire generation of Bitcoin enthusiasts don't remember that Bitcoin was way less than $1, and it was a news event in itself. It wasn't covered as much as perhaps it is today.
Right.
That when it hit $1, so one Bitcoin for $1.
Right.
Right. And then obviously when it hit 10,000, it attracted quite a bit of attention. So we do options. Volatility is key to options. If there's no volatility, there's no really need to trade options. And so because there's so much volatility,
you want to keep your money safe,
Yeah, exactly. Yeah. And so there's really no need for options contracts if things are not volatile. But Bitcoin inherently has been extremely volatile, and I think that's why options and derivatives are so important for this space. And that's what we focus on. Not really spot. I mean, we do spot too.
Right.
But derivatives are the key thing.
Let's go back to that Bitcoin price thing. I think it's interesting for people who are just kind of waking up to $10,000 Bitcoin. How do you think about the Bitcoin price? What does that concept mean to you?
Well, it's interesting because Bitcoin is such a global system that it really reflects the totality of what's happening globally. It could be regulatory things that are happening, whether it's the U.S., China, other places. It could be other things like exchanges and people that are doing stable coins. It could be use cases that people are finding so that there's things. And it could be things like ransomware too, for example.
So you think the price represents those use cases?
Yeah, it's the sum of it. So it's a complex mixture of all of those things.
When you explain Bitcoin price to people, what do you say? This is X percent of what, or this is a reflection of Y?
It's a reflection. I used to work at Goldman Sachs. We always understood that supply and demand run everything. So it's a reflection of things that are happening. I mean, we saw this news article that was unfortunate with a system that had to pay $600,000 for ransomware. That's a buying pressure.
Okay.
Right?
Okay.
And
so need to spend.
Yeah, exactly. So we see a lot of those things, but also great use cases too. So it's just the totality of all those things summed up.
I guess my question was a little bit like, so on a hypothetical level, you're just buying keys, cryptographic keys that give you license to this like piece of data in a database somewhere.
Yeah.
How do you get from that to, oh, well, that's worth $10,000, or a certain bulk of those keys is worth $10,000?
Yeah, so I think it's basically the use cases that are involved with it. You have keys, and it's like, why is it worth 10,000? Well, what can you do with it? Well, this is a system, this is a cryptocurrency that you can send to your friends 24/7, 365 without having to wait for a bank. One of my favorite stories is that I used to, my wife and co-founder worked at Goldman Sachs, and for us to get approval to actually send money through the normal banking system took about 4 months so that we could buy crypto. But the second I had it, we could just use a laptop like this, type in a couple commands and send to anybody in the world. You didn't have to wait talking to your bank for that long, right? And just like stay and like listen to that music and that kind of thing. So that's like the reason it's worth 10,000, I think, is because if people believe that this has some value and worth and it's a medium of transport for value, then and it's convenient, then it has worth.
So when people are asking you, like new people come to you and ask about Bitcoin, what's their first question these days?
Is it going up, right?
Yeah.
I mean,
that hasn't changed, I guess.
Yeah, so it's always like everything else, like the internet. In the beginning, the questions are technical, but later people don't care so much, actually. They just want to know what they can use it for or it's going to go up. And I think speculation is obviously the early use case for Bitcoin. That would be the first question.
So you don't really get into the cypherpunk ethos, be your own bank, that kind of stuff? Or?
No, I think I would say like maybe 20% of the people that approach me appreciate that value. So it's not zero for sure. I mean, they really like this idea that you can, like you said, create an account in your head.
Right.
and just that's your savings account.
Yeah.
You don't have to go to a branch. And when you want to spend it, you can just do it 4 a.m. in the morning without even if the bank's not open. So I think there's that appeal to a large segment of people.
What's the difference between 2017 and today? If you look at the market now, what do you think of the thing that stands out to you where this is the big difference between those two markets?
Oh yeah, I mean that's a question that would take about 10 hours. 2017 and 2019. 2017, I think really what happened is that private blockchains were kind of the discussion point in 2017, right? 2019, that is less so, and I think for good reasons, actually. So in the beginning, we went through this phase where everybody was excited about this new currency, and then everybody derided that currency and said, okay, just blockchain is cool.
Right,
but
we just want to move the keys.
We just move the keys, it's cryptographically secure and this kind of thing, but these things will never have worth at the end.
Right.
And then now we've come back full circle, where there are a lot of investment institutions, very respected investors, long-term investors that have been in other markets like gold, silver, and now they recognize it as a real asset class. So 2017, 2019, that's the main difference.
So you think private blockchain is just junk these days? It's just nothing there.
I do. Yeah, I've been on the record for this. I think that the way I can say that is that people have been saying private blockchains for this use case, that use case. We're obviously fans of blockchains in general at LedgerX, but when it comes to our private data records for customers, do we use private blockchains? No, we just use a regular database.
Right.
If we thought there was value to actually setting every single trade that we do in a blockchain, we would do it in a second, but nobody's even thought about doing that because it doesn't make any technical sense.
So so when I guess, you're throwing out private blockchains, so you're saying that, Bitcoin's good, we want to move value in these systems, we want that value to kind of, be an asset that trades on a public market. We also have all these other assets that are like trying to do the same thing. How do you think about those assets?
Well, I think there'll be, it'll almost be like G5 currencies. They'll be like the US dollar, the euro, the yen, that kind of thing.
Something Litecoin, seat at the table.
Yeah, right. Litecoin is seat at the table. Ethereum is obviously going to be there. Hopefully, maybe one that you come up with at some point. That would be great too, right?
Yeah, right.
And they might have like different trade-offs. Because in a sense, what cryptocurrencies look at, they start to resemble currencies in the same sense that there's a political system implicit to each of them, right? How's the governance?
Why do you believe in more than one cryptocurrency?
Because the governance might be different. It's the same reason. Like when you bet on the euro, for example, I used to trade macro at Goldman Sachs. A lot of what you're doing is looking at the government and the politics behind the euro. And when people are betting on the US dollar, they're looking at the same thing. And if you have different cryptocurrencies that have different governance structures, then essentially what you're betting on, making a bet either positive or negative, is on how stable you think that government structure is. So I don't see it as different, actually, in a lot of ways, between cryptocurrencies and, say, G5 currencies.
I think it's fascinating. Everybody comes to cryptocurrency with their own perspective. You just laid out an analogy with currencies, the traditional currencies that I never would have thought of. I think I was saying one recently where I was trying to compare it to like file types, like JPEG and kind of these things. We move assets around. We move like information on the internet in all these different ways. Maybe that's analogous to the cryptocurrency market. I guess where do you think we are in the understanding of cryptocurrencies? Do you kind of when new people come to you, where do you place them mentally in this arc?
Early days.
Yeah.
Honestly, there's a lot of confusion, and it's not so much about what people don't know. It's all the various things, because there's so many different topics people are looking at. Private blockchains, DLT, things like that are being looked at. It will take some time so that people can figure out the ones to focus on, and then so we're at the phase where we're kind of winnowing down. What are the real main advantages of decentralized currencies? So that's the point that I think we're at.
Yeah, the other analogy I always come back to is how do you know you're not buying like a $500 Texas Instruments calculator? In the past, there was all
Which
these
I've done, by the way. So,
right.
So I feel
but there was a point in time where that technology was worth that price point. Right, so then you kind of get to the cryptos markets. There's kind of this belief that, well, the technology is worth this now, and if it must be that this technology flourishes, these investments must be good. How do you, I don't know, how do you think about that? Because I have trouble with that analogy sometimes, because it seems to negate that, there's all these instances of, you go through consumer tech as a great example of this. Something comes out, it's worth a lot of money, and then it's not. I don't know. I think we don't really understand pricing of cryptocurrency very well.
Yeah, I think in the end, network effects do matter. So a calculator that you buy that's overpriced potentially, the more people buying it does not help you that calculator's worth. I think cryptocurrency does have network effects in the sense that the more people get access to it, which we're trying to do our small part in providing to, and the more people believe in it and accept it, the more valuable it is when it just sits there. A calculator depreciates over time. It gets old, it stops working, it's less advanced. If more people buy that similar calculator, it doesn't matter. I could have Bitcoin, and if more people adopt it in places like China, India, elsewhere, then its value rockets.
So Bitcoin is not a shitty calculator, is what you're saying?
Yeah, I think it's a great calculator.
So let's talk about the futures market. I think a lot of people are wondering right now. We're at $11,000-ish, close to 2019 highs. Does the amount of options, ability to long, short, are you less confident that this price is going to keep going up, or do you think there's a chance these institutions see an opportunity to push the price down? Just wondering your perspective.
Well, I think a healthy market will have institutions to try to do both, right? And so we'll probably see that first. As to what the net push and pull of that will look like, we don't know. So if I knew, I would not be here right now. Honestly, I would be speculating on something, being on a private island at some point.
But you see that data, right? You see long to short ratios. Yep. Are you able to talk about what the ratios are?
Yeah, the ratios are definitely. If you look at the ratio of calls to puts, which is typically all right. So puts are very bearish. People are thinking it's going to go down. Calls are bullish. They think it's going to go up. The interest is definitely in the call side, right? Because people look at Bitcoin as if it's going to work, it's going to really work. And so that's where the interest in options and things like that are.
I want to talk a little bit about market irregularities. Earlier this year, there was a lot of attention on Tether, the Bitwise report. We've seen that stuff kind of diminish a little bit. How do you guys look at the data in the market today?
So we monitor this quite a bit. Like I mentioned, we have an asset management division that looks at how many things like tethers are printed. there's a suspicious correlation between how many are printed and how the price goes
I think
up.
there was recently, there was like 100 million were printed like a couple weeks ago.
Yeah. So that's sort of interesting, right?
All institutions, of course, right?
Yeah, of course. It's not just them either, But I think it's always interesting when you think about stable coins, because the second that they're backed by the U.S. banking system primarily, or euros, you are no longer kind of in the same spirit, in my view, as a real decentralized kind of split currency. Because you know what I mean.
But the Facebook Libra, like, it requires the government to still be around to have currencies.
Yeah,
to back it.
and it requires government regulation as a leverage point if they don't want them to do something, or that does not exist for something like Bitcoin that exists separately entirely from the financial system. So I think a lot of ways, like when you connect it to the financial system, it's a very different beast in of itself. Whether it's useful or not, I'm not saying stable coins are not useful, but they have their own trade-offs because they are tied to the banking system.
Can you do derivatives on the stable coins? I don't know why you would want to.
Yeah, you can like, as I used to work at Goldman Sachs, they explained this. You can do derivatives on anybody, on anything. Basically.
So derivatives on Facebook Libra someday, maybe.
Maybe, yeah, if there's interest. Yeah.
So you guys are today. Is it Bitcoin only still?
It's Bitcoin only still.
Okay.
Regulators are only comfortable with Bitcoin. They're looking at Ethereum next, and that's going to be a review process in itself. But for now,
right, we've heard that that's coming down the pipe.
Yeah, Well, you might know better than
rumors.
I do. Yeah, rumors and speculation.
Yeah.
But for us, like the Bitcoin opportunity by itself is already really compelling.
Do you think the conversation today is still Bitcoin and everything else?
Yeah, I do. In my opinion, it is.
And how do you? I guess when you're talking to people about everything else, are they curious? Do they care? Like what?
I think they care when the price goes up a lot for them, right? And that's the only reason. It's not because they're digging into potentially the technical advances or whatever else that other coins are doing. But in my view, it really is Bitcoin and the rest of the ecosystem.
Right.
And when people talk to us about other things, it's really mostly because of the price action. It's not really because they think that, this is superior to Bitcoin from a technical point of view, and it's introducing innovation that Bitcoin hasn't seen yet.
Let's talk about crypto winter, crypto spring,
Sure.
the temperature of the market. Obviously, early this year, crypto winter is definitely very cold. Not a lot of people excited about it. Is cryptocurrency, do you think interest is back and the market should see activity from that? Or how do you look at that, interest ratio?
So basically the interest has definitely gone up over the last 3 to 4 months, almost exponentially so. I personally have been in crypto for 7 years, so I've seen many crypto winners. I've seen it when Bitcoin hit $30 and everybody thought that was a big deal and it went back to $1.
So it's like you lived in Alaska and now everything's summer. Basically.
Yeah, right. And so when people call this a winter, I'm like, you've not seen a real winter. That is not.
So I'm actually really curious about this because I've seen a lot of charts with these speculations on winters. What was the first thing that you would consider a winter?
I would say the first winter winters require two things. One, extreme excitement when the price did go up, and then a long period of disillusionment afterwards. And I think really the first time was in 2011 when we almost hit $30 or so, but then it crashed down to $1 and it stayed there for years.
How long did it stay at $1 for?
Yeah, I would say don't quote me on this, but about 16 months, I think. Yeah.
Oh wow.
Yeah, so it would stay at $1 and it was discouraging.
So it's a stable coin.
Yeah, right. Yeah, stayed at parity for a year and a half. But that was discouraging for a lot of people, right? So here, we've gone to the point where we had about 4,000. It's about 11, 12,000 now. So we're not too far from the highs.
How did you get through that disillusionment of the dollar? What kept you around at that point?
I watched it, and it kept me around because.
Where were you even looking at that point? There was no CoinMarketCap. There's no.
Yeah, just these kind of shady overseas exchanges that I kept some interest in. And it was more like wait and see than it was speculating. I didn't think there was a lot of opportunity at that time. So it was more just kind of waiting to see if it would break out or that.
I feel like, so I joined, or I got involved in cryptocurrencies in 2013 through reporting, obviously, with CoinDesk. I feel like I've now coming through a couple of these cycles, I get it a little bit more. Do you feel like you have to go through these processes or to even just wrap your head around what the crypto economy is? Yeah.
No, I would say it's not too different from any other kind of asset class. People that have invested in stocks for decades, they've seen every single crash. I used to work at Goldman. People have been through the 1987 stock market crash.
So they get the feeling. Right?
They get the feeling. They go through the tech bubble, and they go through the real estate crash of 2008. And after you see these enough, you start to get used to them. And I think the most seasoned investors and traders have to see them go through those cycles. There's no way, there's no shortcut for that kind of thing.
So what should we see develop? If this is a true spring, I guess, what should we see happen here within the next, I don't know, 6 months, year?
Yeah, us, LedgerX Omni for retail. I mean, they'll make a big difference, actually. You know, just access to a set of pool of individual investors that will change the dynamics of the market, really.
Interesting. Cool. Paul, I'd like to thank you for coming on. Appreciate the
Thanks
time.
thanks for having me.
Yeah,
Really
congratulations on the news.
Thanks.
Thank you.
Yep.